most part, but not too far. We've caught some dip buyers as well. Kevin Green here with me in studio for some options chat. All right, so we kind of lost it there a little bit. Obviously, tomorrow's the big day, but how do you feel about this as a prelude to it?
This is good. Once again, we kind of talked about it earlier this morning. There's a lot of compression that's taking place over the last 24 to 48 hours, and that's the right move for us to be able to digest and be able to prepare for either a break to the upside here tomorrow or a breakdown in the market. So going into the close, you want to be able to hold, for the most part, these levels, stay above 5,600. I still think that's going to be a win, even though we might have a down session. That's not that bad. I mean, if you look at the daily chart, we've had pretty much green days for the last, 4 or 5 trading sessions. So we're looking pretty good right now.
Hey, technically, we got a breakout earlier.
Yeah.
So, kind of our discussion yesterday was because we closed out, I said, this thing's finally going to move. But then we came back into the range, basically.
Maybe if we don't say that, then maybe it's going to just break out, right?
Yeah.
No, so look.
It's going somewhere.
Exactly. We just don't know where.
This thing, is it really going to be within 10 points of 56, 15 on Friday?
No.
I don't think so.
No, I don't think so either. Look, let's talk about some really quick levels here. 56.50, obviously we've been talking about that. We rejected that today. Hit up to 56.70 and then we rejected. So we're below that level. 5600, look for some buyers to really step in here. And then 5400, negative dealer pressure area. Two things to kind of note. 5700, seeing some bullish flows there. That's going to be selling of calls. And the reason why that's bullish is institutionals are able to widen out that gap between whatever their portfolio is and then the upper end of that range or that collar that they're selling.
We're moving it on up.
Yep. And then bearish flows, we have the 55.45 puts catching some interest here today as well. Be mindful of that. But I did want to bring on the radar here for tomorrow and then obviously for the rest of the week. There was actually a really big trade at the 56.25 put, so pretty much at the money, Oliver.
Okay.
An individual is looking at buying these. These are the September 20th, those that are expiring this Friday here. $3.8 million worth of premium in order to put this trade on here. So they are actually making a very big bet that they're going to see a downside move tomorrow. And in fact, that close to at the money is very expensive for that type of amount of premium that you're spending. So somebody's making an aggressive call here. I also have a VIX chart that's going to show just 2 strikes that I think are very important. $35 calls have actually been receiving flows for the last 2 trading sessions.
Okay.
And then the $55 calls. Now this is actually a spread. So it's a 35, 55 call spread for the VIX. That means that they believe that the VIX is going to go up. Doing this only for a debit of around 84 cents. Now, obviously, we would have to have a significant move for it to spike up. It's around 15,000 contracts on both sides, but that's the most bearish VIX bet that I've seen or trade that I've seen over the last 24 hours. For the most part, we've actually had some positive placement here in the market.
Is it just the degree to which where their strikes are? Are they putting a lot of money behind it? Is it a lot of size behind it?
I mean, it's 15,000 contracts. It's really it's a cheap spread, though. It's an 84-cent spread, and you're talking about a 20-point wide trade.
Oh, yeah, they're rolling the dice.
Yeah, rolling the dice. But every once in a while, we actually do see these things hit, right? Just
sure.
Like you would be able to hit at the casino. So
yeah, this might have last night.
So this is one of those other trades.
Mississippi stud, baby.
Yeah.
5, 3, or 7. Bam. That's what that trade is right there. That's basically what that is. That's like you're chasing to the river.
Maybe.
That's a low probability trade.
Yeah.
That's a low probability
they don't have,
trade.
yeah, they have, the upper end on that straight instead of the lower end, right?
Okay.
That's really what they're hoping for.
But if it does, though, so it stands out just because distance and some, decent speculation behind it.
Yeah, definitely. Yeah, I mean, we have there's a trader called 50 Cent, right?
Yeah.
This individual who picks up 50 cents or nickel, 50 cent options on VIX. This is kind of like that trade, even though it's 34 cents. So they're looking.
But they're owning it, right? They're owning it. 50 Cent was a premium collector, right?
Yeah. Well,
yeah.
In some trades,
okay.
If you kind of go back when Crocs was the big thing, that was actually the individual was actually a pretty big buyer of out of the money calls.
Got it. Okay. All right. But this person's they own the premium. They're looking for the pop. All right. That's pretty fun.
Yeah.
That would be a scenario in which something didn't go right, obviously.
Yeah, definitely. Yeah, and that's what they're looking for. And it doesn't actually have to even go above that strike. They just have to have it go in that direction in an aggressive manner. Those are the 2 bets that I've seen or trades that I've seen that have been, for the most part, very bearish. The last thing I will see, we'll talk about liquidity for tomorrow and for the rest of the week,
Okay.
it's actually looking better. And we always look at this liquidity tool chart that's coming from the CME, which is a great tool. What we do see is this like squeeze when it comes to that liquidity. The only reason why you're seeing that is because of the rolling of futures contracts. We have that expiration this week, so you have institutions going from the September contract to the December contract. But liquidity looks, for the most part, good when you're looking at the bid-ask spread. It's still around 26, 27 contracts on both sides. That would be historically kind of low, but when you're kind of looking at the aggressiveness of those individuals that are rolling those positions, they're trying to get ahead of the Fed and lack of liquidity in the front month. Also, just to note, when you're looking at the open interest for the E-mini S&P futures, that actually increased by 10% yesterday, Oliver, which is actually remarkable. That's over 200,000 contracts. That's something that we rarely do see. So that means that there's also additional traders getting into this market now. That could be bullish, that could be bearish, but that just means that we have more participants. We're getting out of that seasonality or that slow seasonality, low liquidity, low volume environment that we usually see in August. We're setting up for end of September, going into October to the remainder of the year. And if you're a bull, you want to see actually a lot of liquidity in the market for tomorrow. You do not want to see a lack of liquidity because that's where we can get significant moves to the upside or downside.
So that's very encouraging. That's a good setup. Hey, but back to the VIX trade for a sec, because you've got a vol thought as well, right?
Yeah.
VVIX?
Yes.
Because that's pretty chill right now.
Very
which
chill.
Suggests that speculators are not going to get paid because vol's going to have to wake up.
Yep, or if you are that individual that you were talking about last week, like Bears love, Black Swan event scenario, what have you, this would be that type of setup. You don't have a lot of volatility being priced into the VIX options, but you do see a little bit of an uptick in hedging activity in the SPX options, out of the money options, which is directly impacting the VIX.
Okay.
The VIX is the measure of S&P 500 volatility.
Yeah.
VVIX is the measure of VIX volatility. So not a lot of VIX volatility being priced in, a little bit of an edge up when you're looking at the S&P 500 volatility.
Okay.
And that's actually been a little bit more aggressive or to the upside today than VVIX. That's actually a good sign.
Yeah, that's a very optimistic sign.
Yes, it is.
It's a very optimistic sign.
Yes.
That the market is expecting no negative surprises tomorrow, basically.
A very low probability event.
Yeah.
And that's the thing that also is a little scary, right? So if nobody's actually pricing in anything to happen, that's when you could probably have a major event. Tomorrow, I think we break out of this range, whether it's to the upside or downside. I still think seasonality is still intact. That major trade, that person that just spent $3 million, $3.8 million on that at the money put is something that I'm keeping on my radar here. And then we have that last week and a half of seasonality, even though we did actually have a really nice day today, breaking above those recent highs.
Just couldn't hold it, but hey, at least we put it in. So kind of already breaking the range. Thanks, KG. Good stuff.